Everyone on Twitter, YouTube and crypto channels are screaming that the bottom is in and we are heading for new all-time highs. But I am not buying it. Instead, I'm showing you 3 indicators on how to play this bull trap and make money instead of losing it. Let's start with what everyone is seeing right now and why this bull trap is so dangerous. After the price dipped below 60,000 in late June and early July, we are now seeing a significant bounce. The price has been pushing up towards 64k and you can feel the market sentiment is starting to shift more bullish. The extreme fear we just saw a couple weeks ago with the fear and greed index hitting lows is now slowly replaced by a more neutral, hopeful outlook. However, we are not in the greed zone yet. The bullish July just have started, so I'm not expecting a crash lower anytime soon. What I want to see is greed, and people have FOMO, the fear of missing out, that Bitcoin will rally without them. And in my opinion, the bullish RSI weekly divergence is the bait. It will be the justification that the bottom is in. Why I think this is a bull trap? Based on historical data and 3 key indicators that for me are flashing warning signs. So let's go through them one by one with increasing significance. First indicator is the 200-day moving average, which is still a wall of resistance. When Bitcoin price is trading above it, the general trend is considered healthy. When it's below, trend is considered weak. It's one of the simplest and most watched long-term indicators we have. And right now, while the price is trying to recover, the 200-day moving average is sitting significantly higher. This level will act as a massive resistance. And look, in the past market cycles, we have seen similar patterns. A major downturn followed by a relief back towards the 200-day moving average, which then acted as a ceiling, rejecting the price and sending it to the new lows. For me to even consider this is a real sustainable rally, we would need to strongly break and hold above this level. At the moment, we are still far from it. The second indicator we have to have a good look on is market sentiment. The best way to measure market sentiment is the crypto fear and greed index. Why is this so important? It's very difficult for large players to sell huge positions when the market is in extreme fear. There are just not enough buyers to sell into. And a rally like this is designed to shift the sentiment. It can make people feel euphoric and ready to buy again. And this is exactly how exit liquidity is created. Now the most important indicator, and for me the strongest signal, the volume and momentum divergence. Look, a healthy trend often has price, volume and momentum all moving in the same direction. But what we see on the charts right now is clearly different. The recent price bump happened on a very weak volume. We have basically no volume here. Look at the volume at the pre-cycle bottoms. It is nowhere comparable. We have rising prices with falling spot demand. This is also a form of bearish divergence. If buyers were truly stepping back into the market and this is the bottom, I would expect to see strong spot demand pushing prices way higher. Now that you see this warning sign, you're probably asking, what is the plan? But before I break down my step-by-step strategy of how I am positioning myself, if you're getting any value so far, do me a favor and hit that subscribe button and turn on notification. I post updates like this on a daily basis, and in a market that is tricky, you don't want to miss the next move. Alright, so let me be clear. This is not financial advice, but my personal game plan. I am not buying this Bitcoin rally. I am not going along here. I am patient. I am waiting for what I believe is the perfect setup. My thesis is that this rally will likely fail and I am preparing to short the market. As you already know, my primary target for potential short entry is the zone between 67,000 and 72,000. This is an area where price is approaching major resistance. I will also be watching for a potential spike and rejecting near the 200-day moving average. But I'm not just blindly shorting here. I want to see clear bearish patterns from the daily chart. And of course, most important, I want to see this on weak and declining volume and high greed levels. My stop loss will be placed above that key resistance area. If Bitcoin smashed through 74,000, holds it at support, my bull trap thesis is invalidated. I will take a small loss, but I will enjoy the gains I have made. The spot Bitcoin I bought earlier. If the trade plays out as I anticipate, my first take profit target will be the previous support level in the low 60,000s. If we get that kind of downturn that I think is possible, the next major target could be the 200-week moving average. So to recap my perspective, we have a rally that appears to be on weak volume. We are heading directly into what I see as a strong wall of resistance. And we have market sentiment that could be shifting just enough to create exit liquidity for larger players. This is for me the perfect bull trap, and this is the reason why I'm not buying Bitcoin. Here, I believe that patience is the right move now. Remember, the market often rewards discipline, punishes FOMO. Now I want to hear from you. Let me know down in the comments if you think I'm right or wrong. Are you buying into this rally, or do you wait like me to short the market? Whatever you do, be careful out there. And as always, thanks for watching, and I see you next time.